Good evening. This is the Eye of the Storm podcast with the big picture technical view for the US dollar index on Monday, May 29th, 2023. The dollar continues to enjoy, I guess you could say, an updraft where the dollar has now crossed above 104 and still appears that it may have continued upside. Let's take a look at that big picture out on the monthly chart, which right now encompasses about 22, 23 years of data. And what I've come up with thus far is that likely in March of 2008, we completed a primary A wave down. And we've been now involved with a primary B wave from that point. And within that primary B wave, I'm best counting as an ABC, an X wave, an intervening X wave, followed by an additional ABC. Now, right now, I'm considering these minor degree, which puts the second A wave, intermediate A wave, up at the recent highs at the 114 plus area, 114.778 to be exact. And then what we're doing right now is an intermediate B wave to the downside, still be followed by an additional C wave to the upside. Now, that's the monthly look, the monthly Elliott view, that we are involved in an intermediate B wave down to be followed by an intermediate C wave once we reach particular levels, which I will go over in a moment. The alternate view would suggest is that these that were put in as minor degree would actually be intermediate degree, and we would show an intermediate A, B, and C, and above that then the primary B would already be in place. Now that particular view, in contrast to what we're looking for, would suggest that this is wave one down, right? A minor wave one and a minor wave two possibly complete. And that again, what we've done is a one and we're in a two and we're about ready to fall off the crevasse, fall off the top, or it'll collapse underneath our weight. Now, I'm not exactly looking at it like that. So let's start working our way lower. So again, ABC, A, which still could carry a different picture. But here we have what I'm counting as an A wave down, and this would be an A, a B, and then we get a 5 waves down, or it could actually be 5 waves down. I'm giving it the benefit of the doubt right now, counting it as an A, and this being the internal B wave. So we have two ways of really looking at this, and it's really congested here in the middle. The big picture, if I'm going to look at the alternate view, then this would be wave one. And now we're looking at it as A, B, and we're going to get a C wave back up towards this level. And that's going to be a second wave. And then what would be established by then would be a very strong drop in the dollar. That's what that C wave. But in either case, if it's 1, 2, we're looking at a third wave. Here it's A, B, we're looking at a C wave. Both carry pretty much the same characteristics. So in either case, we're now going to focus on what all this is happening here, because there's a couple of things that we could look at here. If this indeed is the B, and we're dropping in that C wave now, which is kind of not gaining as much traction because of the continued rally, then we'd be looking for a sharper decline to actually kick in pretty quick. Now, taking it down to the daily chart, you can see how we've got this now worked out. The A here is the possible finish on a minor degree, a minor B, and this then is wave one of C. So minute wave one of minor wave C, or we have 1, 2, and it's minute wave one of minor wave 3. So we have a couple of scenarios here, but if we keep it right where we are, A, B, C, which suggests we're still got a more upside to do. That we're going to get up towards, remember, this is perfectly flat. The A and the B wave are the same length right now as it's marked. But that's considering that this is 1, 2, 3, 4, and we got the 5 still left to do. Kind of wave one's a little bit funky, gonna have to go with it. Otherwise, we also could count this as A, B, C, and then we're looking at a little bit different of a count where we should still come down. Right now, it actually is looking more as if it's 1, 2, 3, we get a little 4, we get a 5, and we get up close to being closer to that flat level. So potential for upside remains. We have 104. We have the sweet spot at 104.32. Kind of got a little bit above it and then dropped back below. Right, got a little bit above it, dropped back below. Still closing for the week. Pretty good. And now we're going to be looking to see if it can continue to move higher, which actually was doing in the Globex sessions. We get a little bit higher. We get at 104.78, and then a quick break up to that 105 level. Many things can trigger that. Many things can come in. Just depends on what we see happening in other ancillary markets, which are more dollar dominated. One would be gold. The other would be the treasuries. And then also crude. So we got some outside forces on there. And then plus just against all the other currencies, the euro, the yen, the Swissy, etc. So a lot going on, a lot can happen. Either way, if I get an ABC flat, this B, that's the alternate count. So that B would move over. And then we get that pretty strong C wave down. And again, I would be able to show you once we had that in place, again, going out to that weekly, because where I'm going to draw my lines is right here. You can see them. This is for if this topped wave B, and actually, even if it was to come out here, I'm not still looking for it to be flat, so it'd be the same level. Okay, so either way, I'm believing that it's going to be a C wave or it's going to be a third wave. Here are the fibs. So again, within the big picture, this is our upside capabilities. Not necessarily looking for greater heights out of this. It can turn into an irregular B, but it would not necessarily be, it would just be a kind of normal, but not a flat. It might trigger and go up to 6 or 7. The 1.618 brings us up to 108. Some strange things, not saying it can't happen, but those are the fib numbers going up. If it turns into something more than just an ABC flat within this structure right here, then we'd be looking for those higher levels. Otherwise, technically, the market should turn and begin to drop. And I would think that because it's the start of a C wave, which is pretty powerful, like this A wave was, it's going to do it pretty quickly, just as it did here. Just like bing, 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 bing. At least back down to that low, which is par 71. And I use par for 100. So par 71 versus 100.71. Just an old way of doing things. I'll try to be more clear. So it would at least come down. If it were into that C wave, it should be pretty quickly back down to that 100.71 level, pretty quickly. It's taken 1, 2, 3, 4. It's taken 5 weeks to get up to here. I think it would take less time to get back down to it, like maybe a week or two, and then continue. So these are the C wave. So wave C would be equal to wave A at 91.92. If we're looking that C can come in greater than that, well, then we got to start coming down to here. Can that happen? Sure, it can happen. That technically, I'm showing you how it can take place. If these are accurate, and even if this B comes out to here, it would remain an accurate level for right now. Big picture, big picture. So we still have upside to complete before this big picture would kick into its next down cycle. But whether it does it from here or whether it doesn't from here, my bigger picture is looking for the completion of this internal counter trend rally for right now, and for the downside to kick in again. So right now the trend remains down until I can get that intermediate wave B in. Then the trend's going to reverse and turn positive once again. Big picture, we're looking pretty far out there. We're looking pretty far out there when we consider that this low was January. And so for the first 6 months, practically, we've been stuck in a pretty tight little range. So to consider how much longer is it going to take, if this one was from September of 2022 down to January of 2023, we had October, November, December, January. It's 4 months it took to come down. If we get up here, then it could take us four months. So if we get up here sometime in June, then we would be looking that we would be getting back down there in late October, November. That would be down into here. Okay, so that's it for the dollar. I'm going to bring it down again. We can take a peek at our near-term charts, right? The 4-hour. They're pretty clear. This has been a very strong, not totally uninterrupted, but it's been a strong rally. And again, A, B, C, and then we're just starting to here, down to here. And then we get a 1 and a 2. It didn't really break, but it kind of could be. Strange. So we could have an A, a B, and a C completing something here, or 1, 2, or 1, 2. We got a couple of choices there with the irregulars and everything else, and then we start with an ABC, or excuse me, a 5-wave rally. So we got an A, a B, and a C coming up, and then we're going to put into that a C wave up in the top. But if that's the finish of the B wave, then we're going to say 1, 2, and then we're into. Yeah, see, they're very strange. These are impulsive, that's impulsive, that's impulsive, and this is impulsive. So we either got 5 coming up, or this is wave 3. We got a little 4, and we'd finish up with another 5 and be looking for these levels, and then that decline, which should be pretty strong and look pretty clear as we have seen in the past. That's going to be it for the dollar. Thank you very much for listening for this week. That concludes my new format. And I'll also try to put out either tonight or may wait until tomorrow, depends, the big picture fundamental